Hello everyone, welcome back to my channel. So this video marks the beginning of the week number 78, this road to 100k realized return challenge, and the week started as expected on a very negative note. We had already a feeling of what was going to come because yesterday on Monday the US stock market was closed. But the markets in Europe were open, and basically they tumbled down because of the threats that the U.S. President Donald Trump had leveled at several European countries as they attempt to resist their intention to take over Greenland. And these tariffs, these tariff threats were met by a severe, or apparently, judging by the rhetoric from the U.S. European Commission President Ursula von der Leyen, that these threats were going to be met forcefully, with a forceful response from Europe, and so investors are very much afraid that a global trade war will ensue, and they are responding in kind by basically selling off and selling out from the market. And so the environment today, like yesterday, is very much a risk-off environment for stocks. Metals have been going up, especially precious metals, gold and silver, but when it comes to stocks, this is pretty much have been downhill for yesterday and today. Now, with this in mind, we have been forced to, of course, sell the calls on the Qs, of course, receiving a very small premium. We just received 33 cents for these calls, as you can see here. But now, because we had enough buying power in hand to do this, we decided to go ahead and sell 606 put. And the reason for that is because we have currently 500 shares, which were bought at 630. And so for each additional 100 shares that we buy, if we buy at 624, so $6 lower, we lower our cost basis by $1. And so by this order of reasoning, if you buy 100 more shares at 618, it lowers the cost basis by $2, $612 by $3, and since 606 by $4. And so what we are attempting to do is, if this put is assigned and we buy 100 more shares at 606, we will get 600 shares in total, but the cost basis comes down to 626. So from that point onwards, we can sell calls not at 630 anymore, but we can sell at 626 and breaking even on the shares, and we keep the premiums for ourselves. Now, because the market opened at around 609, 610, it made sense for us to sell a put on the strike of 606, which was one that we the next one below the share price. It would not make sense to sell at 612 because those puts would be in the money. And so we received $1.17. You can see here we received this amount of money, which was quite good, I should say, given the fact that it was a bit far off from the share price at the time. So this was a pretty generous premium. Keep in mind, this is a 0DT option. This expires today, so we will be able either to sell another put tomorrow with a similar strike if the price stays like this, or we can even roll over the position for another strike if we want. But for sure, we are not going in all likelihood we are not going to roll over, because at this point I think it would not make much sense to roll over to a 612 expiring today. It can make sense to sell a put for 606 tomorrow, but we will have to wait, see how it develops, because at this point this put still has quite a bit of value here, as you can see, and so until it loses most of its value, we'll probably stay put and see what happens. These are of course much more generous, but for the time being we'll see what's going to happen if things stays like that. Premiums are quite good, as you can see here, 272, and this one as well, 374. There's a big jump probably here from 600, yeah, from the one on Wednesday to the one on, yeah, there's $1 difference in here, and probably the reason is because on Thursday the PCE readings will be released, so that's probably the reason why, but we'll see. Now also, because we still had some buying power left, we sold the put on ARKK, which is basically a filler trade to use our buying power. We still managed to get a quite good premium on this. We received 43 cents for this strike price, 76.50, and taking into account that there is only 4 sessions left, I think this is a quite good deal that we got. But so far the focus is on what's going to happen to the Qs. We decided, as you can see here, we did not use the buying power to sell Nvidia puts. This is off the table for now, because now, since we can use our funds to sell puts on the Qs and see if we can get rid of these shares and complete the wheel. This is what we are going to do from this point onwards. And I think it is pretty much it. Nothing is happening today. Tomorrow, yeah, this data is not that important. There are some earnings this week. I think Netflix was going to release its earnings today, yes, but I think the earnings effect on stock prices is pretty much secondary to what is going on today with the threat of tariffs. This is the earnings on Netflix will be today. Intel, if I'm not mistaken, will be publishing its earnings on Thursday. So there's another market mover information that will come about on Thursday besides the PCE. So here it is. Let's see if we can find it. Apparently there is some delay. The platform probably is being overflown with orders. There must be a lot of trading going on, but yeah, I'm sure that there is some sort of, let's see, January 22, at Texas Instruments, Abbott, and yes, there is. On Thursday we have the Intel results. I think this is probably the only other big tech company that is reporting this week, but yeah, we will see what's going to happen. For the time being, this is all. Feel free to leave your comments in the comment section down below. I'm also available on LinkedIn in case you need to ask me any questions, and as always, feel free to like the video and subscribe to the channel, and we will reconvene at the end of the week to see how the trades played out and close out the week number 78 in this challenge, and I'll see you there.